Okay, everyone, just going to test the sound here before we get started. Just waiting a second for the stream to catch up. And that looks good. And now we'll just hit this. And I lowered the latency a bit. It's still taking a couple seconds to catch up, so I'll lower it a little bit more for next time. All right, so that is working. So thank you all for coming out. Make sure my little comment section is up here and good to go. Hope everyone is enjoying your holiday. Cool. Notifications are working. Oh, and I see some likes popping in. Awesome. All right. Well, I'm going to assume everything is good to go here. I just did a little tweet, let the people know I'm live. Yeah, hope everyone's enjoying MLK Day. You know, we're getting a little storm, I guess you can probably see over my head there, which leads me to just talk about the slight difference we're going to have in today's stream versus most. And that's, I already did the work. I was bored. It was storming all weekend. It was cold. So I already did a lot of the work. So probably what that's going to mean, hopefully for you guys, is that there's just going to be less of me scrolling through random charts and more of me getting to the point. So no holiday in England, no holiday in Canada either. I'm here in my house by myself. Everyone's away and working. So another reason I was bored and I got all the work done. Again, what are you going to do, right? Plus, the crypto market never closes, so I guess there's technically never a holiday anyway. So the quick ramble I always give for anyone who's just stumbling upon this today, essentially a weekly live stream where I go live and I kind of give a preview of what the Stats Edge trading membership is and the blog post I put together every night with my thoughts on the market. On top of what you'll see here, we have a little chat room, no signal service. I don't believe in those. Access to all my scans that I was looking to find these setups at. If anyone pops into the chat room anytime, just ask about, hey, what do you think of this chart? And we do all that. As well, we have a monthly live Q&A, which is just closed down to the public and just members, and I'll go over any and all questions people have then. And there's probably more too. I forget right now. All right, well, let's just click that button. And if that worked, we're into it. Cool. So again, I've already done all the work so I already have my thoughts formulated on the market. I have a general understanding of what I think of everything. So I actually have the blog post here, which I'm going to refer to periodically. So this is the exact post that the Stats Edge Pro people will see. And again, it's the same format of what they'll get each and every day. So we'll just get right into it with the crypto markets. We'll talk ADA, Bitcoin, Solana, and Mana, which I think is interesting, and Atom as well. So I'm just going to keep flipping back and forth here just to make sure that I'm not forgetting anything. But AUSD. Oh, I always go to the Kraken one to annotate it, and then I forget. So with Cardano, right, Cardano, this is pretty obvious, right? It doesn't, I don't think, take a huge leap of technical faith to know kind of what most people would be looking at here with a lot of this support area, right? Pretty much $1 even has been huge for a long time here. So we came back into it. I actually pointed out on Twitter this little RSI divergence that was going on at the same time, and we've bounced off that. So for this, I'm still thinking as long as you're above $1, I think you're good. Anything under that, I think, that's when you got to get a little bit more worried about everything that's going on here. Bitcoin, again, a lot of this crypto, one of the reasons I love crypto actually is that it's technically sound. It makes a lot of sense technically. It trades pretty perfectly technically, and it might be because there's less games, HFTs, and stuff like that. But same thing I'm kind of looking at here with Bitcoin, right? It's 40,000. I think every trader on Earth is looking at this 40,000. So I think it may be a little bit choppy around there. But, hey, what do you do, right? It's the level, so you got to play it. So 40,000 goes all the way back to here. It was resistance here and here and here, and then support here, here, and here. So as long as we're kind of chopping around this area, I don't think there's much to do. I put in this line right here because I think if we can kind of reclaim this 45,000 area, that might be worth a shot to see if we can at least test 60,000 and maybe go from there. But, really, as long as we're inside this range for a longer term trade, I think you kind of sidestep Bitcoin and maybe look at some of the other ones. There's a lot of things going on in the crypto world that you don't have to be in Bitcoin, which is one of the reasons that I really started getting into trading it. Like Solana here, for example, same kind of a thing. Can I just zoom in on these and make them, pretty visible too? Solana, this is like 130, 125, 130. Support in through here, big break up, long push down into it, and it's holding above. So Solana, I'm basically watching this support, and if we break through here, that's where I'd be interested in it. And a lot of these cryptos you'll notice are the same. They've had this earlier in the year to earlier last year spike, and I'm basically ignoring all of the ones that have broke down and are holding below that spike and trying to pay attention to the ones that are showing this relative strength, right? Because as a lot of you guys know, that's one of my philosophies with trading is look for what's strongest and just go with that. Might not be as an exciting as a life as trying to pick bottoms, but I think it's easier in the long run. Mana. So this is that Decentraland. Again, I don't know if I'd ever see myself buying virtual land, but the chart looks strong. So the area kind of looking at here is 250. As long as we're holding above this 250 area, that seems to be a support for a long period of time. I think that's interesting. This downtrend line got broken here yesterday. Let's actually, at least for the crypto, I'm going to make sure I keep going into, because I did this yesterday. So the equities will be the same regardless, but you can see a little bit of a pullback here. So I'm kind of just looking over these highs right here. You could say 325 if you wanted to wait till these highs here cleared 350. But I think you can, as long as you're above this line, which you can just see we're testing around 250, I think you're good, just as a long kind of a bull flag. If that breaks, then obviously we've got to shift our focus down here to about 230. But ideally, we can hold this 280 to 250 area, get a push up from there, and then maybe this thing can continue. But again, this seems weird to me. I've yet to hear a logical argument for, and again, I'm not an anti-crypto guy. I'm not really an anti-NFT guy. For some of them, like the bands that do a backstage pass with an NFT or something, I get that. The profile picture monkey thing and the virtual land are just two things I can't figure out how to get behind yet. So if anyone's got a case, let me know. I just, everything else I've seen, it's basically just been I want to buy it so that I can sell it to someone else later, which, it's not the dumbest reason to have anything, but Atom, my old enemy Atom, I've taken some trades here on Atom already. this year. Now I'm just watching it to see if we can get, you can see the note I have here and also on the thing, above 43, which is the resistance that went on through here. So this one is pretty much right at all-time highs. And again, as a relative strength guy, that's what I want to look for. You can see this 43 here just keeps acting as resistance. We have a real hard time getting through that level. But we have a low here, we have a higher low made here, and then we have all these equal highs. So if we can kind of get and clear through this 43, it could be off to the races with this one. Don't even know what this coin does, to be honest. Another one that I've been playing a little bit, it's been a bit of a jerk, but I've got some of this in probably about where we're at right now. So I'm probably pretty break even on it. Is this engine coin? Again, not too sure what this one does, but just big rounded bottom going on through here and just holding this kind of $2 to $2.50 area. So as long as we're above $2 on this one, I am interested. And then, if we can get a pop off that, that's great. It's all risk reward with these coins. So like if you just look at this chart, so I'm in, again, from probably around here. I think it's like 220-ish or 230-ish. I can't remember. And I'm risking from there to say, 180. That risk compared to even if we went and got, I keep forgetting there's a drawing tool I can use. So say I'm in from about here, and then my stop is down in this area. If we get back to even just test these highs, that's a 6R trade, right? So 6 times my risk is my potential gain on just that. If we break that by a little bit, maybe try to hit $6, that's a 10R trade. So it's one of those, you almost have to take those. It just mathematically, if you think, even if I'm right, 20%, if there's a 20% chance that NGen is going to move from here and get a 10-hour trade, just mathematically, that's the trade you got to take. So it's one of those that I will, I'll continue to take those trades as long as they're here on the crypto market. I think a lot of the crypto market is waiting for Bitcoin to resolve one way or the other. They're not super correlated anymore like they used to be. However, I do find that they're correlated enough in the same way that I look at the indexes, which we'll go through in a second, like ETFs, to try to figure out the direction of stocks. I use Bitcoin as the same way. Now, that doesn't mean that if Bitcoin is selling that you can't have these coins just rocket, because we've seen it way, way more than when I used to do a lot of stuff in crypto in the past. When it comes to, using Bitcoin as an index, that's just kind of the way that I frame it, is that if Bitcoin's moving higher, I think there's a higher chance that these things go with it. And if Bitcoin sells off and moves lower, then it doesn't mean that they can't go, but it just means that, you got to be a little bit more defensive with that. From the Forex side of things, I really didn't see too much. I didn't see anything that was worth noting in the Stats Edge Pro in the blog post that we'll go back to in a second. However, Euro is interesting here. This anchored VWAP from Brian Shannon, something I'm starting to play more and more with. I was looking for this bear flag to resolve lower. It didn't. It resolved higher, but it smacked right into that anchored VWAP, and now it's coming back down. So, if I kind of extend this out, if this bear flag still breaks lower, I'll be interested in that just because of this massive rounded top that we might be seeing in the euro. That may correspond with UUP, which is just the dollar index. So for anyone who doesn't know, the UUP is just essentially an ETF that tracks the US dollar versus a basket of other currencies. So it's got some yen and Canadian and Aussie and all of that in it. And and it's been doing very well. You can see kind of, again, the inverse look, because I think the euro is a pretty large component in the UUP. So the same kind of rounded bottom as opposed to a rounded top, and then this flag that broke the other way and is now pushing back. So I always recommend that if you want to trade something like the euro, looking at the UUP makes perfect sense. But that's a hypothetical that would probably take days in order to fill. So next, let's go into stocks. I think, yeah, I did all the stocks. So yeah, first index that I looked at was the total value stock world, blah blah blah. Essentially, this is a Vanguard index. The ticker is just VT if you want to look at it, but it includes US and then all of the other countries as well. So it's basically trying to at the best it can gather the world of. Oh, hey Sam. It's trying to gather kind of the entire planet, all of the different indexes, just to see every now and then, usually maybe once a week, I just zoom out and look on the whole world, and you can just see it's just stuck in a range, right? So, you know, I'll read the paragraph that I wrote at the end, but I've seen a lot of bearish stuff out there, and I don't get it when the whole world index is in an uptrend like this and then stuck in a range. I don't really get kind of the bearish action, but you know, it's just the way she goes. Let's actually just turn off that there. Keep the indicators off, just stuff I'm playing with. So that was the first note that I made here. And then we went into Xlre, which I think is the star of the show. Actually, let's go. Yeah, go into this. So this chart right here is from Koyfin. It's essentially just all of the different sectors that make up the SPY and their relative performance over the last week. You can see that every other sector was negative or flat, except for Xlre. So, you know, the energy sector as a whole is what's holding up the market. However, see the note I took here, energy super strong, but maybe overbought. So I'm taking a look at this and I'm saying, okay, is it getting to the point where this is getting a little bit too extended, right? Energy has definitely been holding up the whole market for a while now. We were watching this bull flag here for the pro members for a while. Broke out and just, you know, like 10 days in a row straight up. Might be getting to the point where it's a little bit overbought, but super strong. And then I went to the weekly chart and I just showed that this area, this, you know, $65-ish area, put that in there. I just want to make a quick note. Yeah, this area it struggled with, so there's a bunch of congestion. So anytime I see a massive extended move into congestion, I start to get a little bit worried. So I'm going to watch some energy stocks, but I'm going to keep that in the back of my head that we may be a little bit overdone on energy. You know, the way that you resolve, and this is another Brian Shannonism, is the way that you resolve an overbought condition is two ways. It's either through price, so it pops up, hits something, bounces back, and then you get the continuation potentially later. The other way you can resolve an overbought condition is through time, which just means that it moves up and then just takes a while to get through. Now, for energy investors, you're hoping time is the way it goes. It's not done through a price pullback, but both of those means that it probably might not be the best time to initiate new energy related positions now. But I do have some of them on watch just in case. But that's kind of the star of the show, because if we go back to what I showed here, the rest of the sectors did almost nothing last week, with real estate and utilities being down. So kind of getting a bifurcation which I think is going to be the theme in this that we'll go over. So after I did those energy charts, it was just right into the RSP, which is just an equal weight version of the SPY, essentially just meaning that each sector in this is just part of the S&P 500. It's same stocks weighted equally instead of cap weighted. So you're getting more of a what is the overall market doing, and we're just basing at these highs, right? So I could even remove this and just draw in one of these. Right? So we just have this big strong move up and then basing. So until it breaks down and worries me one way or the other, we're basing at highs, and that's generally a bullish thing to do. So if we pull back, I'm obviously going to watch. I think this 150-ish, 152 is the area, and then below that, we've got this support zone right here below, which is a pretty sizable move to get there, from where we closed. Right, to get to 150 is a 6% drop, and then to get to even lower, that's a 7% drop. So these are pretty substantial moves, which would suck, right? Obviously, if we got down there, but just saying that we can pull back pretty far before we're entering in anything that's anywhere near worrisome of a potential rollover or overall downtrend, right? So I'm not too worried right now, but I am watching those areas below. And also this trend line, which just connects this low and this low. You can see that rising up to here. That would still be a pretty substantial down move even to get to that point, right? So 3% or so. But this is the most amount of bearishness I've seen on Twitter for a 3% off all-time highs. And I make that joke all the time, but this one is even worse, I think. I don't know if people get the long weekend and they're getting scared for that, but next was the SPY. So again, same stocks as the RSP. This one's just equally weighted. So it's just looking at an overall weight of the market. So, things like, I should just say, cap weighted. So cap weighted being, Apple, Microsoft, Amazon, Google, all the big guys are going to make more of a move when it comes to this. And we have this uptrend, and that uptrend is holding. As long as that continues to hold, it's just a launch pad to higher highs. If this uptrend line breaks, we have to watch 450. As long as we're above 450, I think we could chop around for a long time, but as long as that 450 doesn't get violated, then I'm overall still bullish on the markets. Under that 450, it's time to reassess. IWM of the major indexes are the most worrisome, right? It's how many times can we touch this support zone before we break? Like, how many? Is it this time? Is it another time? If we don't get a move from this support soon, then a potential breakdown is coming. It's one of those things. It's like, what was the Seinfeld reference? That he was trying to break up with someone, and he was like, it was, like pushing over a vending machine. You can't do it all in one go. You got to rock it back and forth. And it's the same with these support levels. Eventually, if you knock on the door of a support level enough times, you're going to break through. This one of all of them is the most worrisome, which again, as we get to the stocks that I'm looking at for this week, you'll notice are much larger cap names. And it's just because the larger caps, as we saw going through this list, are holding up way better than the smaller caps and have been all year, right? The small cap, basically, the story for the last year and a half has just been this range. Could it continue for a long time? Yes. I would say as technical traders, we kind of have to bet that it's going to resolve in the direction of the trend, because that's most of the time how trends resolve. But it's certainly possible that this is distribution. We're going to push lower. I think the max Payne theory, which is something that kind of jokingly but partially serious, I think about the market where it's going to try to hurt the most amount of people that it can. Is that camera like following me? That's interesting. Jeez, ADD brain. But the max pain thing, like the thing that would hurt the most people is if we broke down a little bit just under this resistance and then rocketed back up. That would almost be poetically hilarious because we had the same thing on the upside. We had this break up that got everyone super excited that this range was finally going to resolve to the upside. We crashed back down. The only thing that would make everything even funnier would be as if we broke down and then rallied back up again. Just to hurt both sides, right? Hurt the bulls on this spike and hurt the bears on that fictional spike. But again, as long as we're holding 211, you got to say the odds are in favor of resolving in the direction of the underlying trend. If we're under that, maybe that's when it's time to, again, reassess. We already went over that chart. The Qs are holding on. They are not letting go. This zone that I highlighted here, talking about so 380. We have highs here, lows in through here. So 380 is kind of the zone. We broke it twice last week. Each time we were met with buyers. So we had this one that for a second looked really ugly. And then buyers came back in and pushed us back up. And then we gapped under it on Friday. And then buyers came in and pushed us back up. I checked on futures a few times and they were about even. So they hadn't fallen out of bed or anything. Because the futures market, I think, is still trading, but kind of like an overnight session. So we're having some indication on what's going on if there's anything major. I already checked the news. There was nothing worthwhile putting in the blog, which again, what we're going through right here is the blog that for all of you pro members that are here, it's up on the site now. You can look at it. There was no news that was worthwhile. Financials are really interesting to me. So XLF, just because we had a breakout and a pullback, and this is, if I had to pick one setup to play for the rest of my life, it would be a breakout of a prior resistance area, which, right, that's the resistance. We had the breakout right here, a comeback down and retest into it, and then a push to new highs. You can get it as it starts to push off this area. The reason I like it so much is say that this is what's going to happen to XLF. You can get involved kind of in this area right here with a pretty tight stop. And then you're already selling bits as it's crashing into new highs, as opposed to a lot of newer traders that are buying as it's breaking new highs. So that looks like that's a potential. And then we have mid caps. I put this near the bottom because I think this is the least consequential of the market right now. And it's just because it's in the middle of a range, right? Like this is the smack dab. This blue line is the middle of the range. And we're right at the middle of the range that we've been in here for a very long period of time. Puts us over these prior highs. So maybe if we can hold over these prior highs, we go back to the top end of the range. Again, I'm just giving all of these things the benefit of the doubt because other than the IWM, these pullbacks and these bases that are occurring in the high end of the overall range as opposed to the low end. If these were all occurring in a lower end of a downtrend, I would be a little bit more worried. Xlre. Right, Xlre is very interesting. We have this kind of 48 zone. This is the real estate ETF for those who don't know. I just know that this background watermark might be a little hard to read, but we broke out, we've come back, we've tested it, and we put in a big bottoming tail on Friday. So if we can kind of reclaim this, $49 area, then I think we're still good on real estate. If we continue to trade down from here, then that looks like that was a failed breakout. So it might be time to avoid the real estate sector for a bit. Things like REITs, stuff like that we like to trade. TAN, can you guys see I did a lot of work this weekend? it's cold. It's snowing. It's still snowing. Oh yeah, you guys. Maybe not, but yeah, it's snowing hard out there. Um, so I had a lot of time to look at charts basically, and I did a lot of work when it came to backtesting and algorithms and stuff, which I'll go over in the to the member only Q&A that we're not having next week, but it will be the week after. TAN, the solar ETF, we've got $69 support. That was support back here, support right here, and then we're back to it again. Might be time to look at some solar names, see what solar names are showing some relative strength, because if this is going to bounce off that level again, I would like to be involved in some of those. I think next, XLI, which is industrials. So a lot of people have already been aware of, and if you haven't, just if you're not that active of trader, growth stocks have been just getting murdered, right? So anything that, when I say growth stocks, I mean, think of companies that don't really make money now, but have a promise to make money 20 years from now. And stocks that got incredibly overvalued during the pandemic. So Peloton, Zoom, these are kind of the common names, even things like Netflix, stuff like that. Things that just, hey, this thing's not making money right now, but it might make money in a million years from now. Things that Kathy would invest in. They've gotten absolutely murdered where value names, energy comes to mind, financials, and then industrials. So when we talk about industrials, dog, 1 second. Someone must be home. Or he's defending me from the squirrel again. I apologize for anyone else's dogs that got triggered. Yeah, so industrials, right? Large, machine companies, things like that. Haven't quite broke out yet, but we're basing right at the highs here. So I'm actually looking at these as well. Again, this is a good way to make lists of when you see a stock come through your scan, if it's an industrial, maybe that's something that you look to invest in there. Geez, so many charts, eh? Last one for the markets is Drive, DRIV. So Drive, this is just an ETF that looks at EVs and autonomous vehicles. All right, so Teslas and Neos and Rivians and all that kind of stuff in the world. And it's doing a pretty good job of holding above these recent highs and basing again in the high end of its range. So if you start to see Drive start to move a little higher, it might be time to look at some of your favorite EV names to see if it's time for them to finally go. If that happens at the same time that TAN that we just looked at bounces, I think we might be on to something. It may be a kind of a flip of the growth value thing. Maybe we start to see some of the Kathy names come back. Easy way to do that is look at ARKK, which has kind of got its own little level down here around $80. I just don't know if I could really buy anything that's just gotten that hammered. It's got a lot to get through in order to move higher. So lastly, and then after this, I'll open up for any charts you want me to look at. But lastly, we'll just go through the list of what I'm looking at and why. So, quick diatribe, I guess, about this is I have one of the goals I have this year is to kind of I never jump ship from setups that work to completely new setups, but just for a lot of reasons. One, I think that your setup isn't insanely relevant. It's more about risk reward and rants I'll try to avoid. But the main reason that I always try to stick with the same thing is I just think that they work. The way that if a setup works, it kind of always works. And I say that as, things like trend following, right? Which we all know that I do a lot of relative strength and a lot of trend following type stuff. That will always continue to work. But one thing I'm trying to do in 2022 is really refine my entries, because the way I look at it is that, say you have a 60% win rate in all your trades. If you push really, really hard and back testing and refining and going through all this, maybe you get to a 65% win rate. It's great. But if you took the same amount of time and energy and you focused it on getting from, say, a 1.5 to 1 risk reward ratio to a 2 risk reward ratio on average, and you push that math all the way out for your trading career, focusing on the risk reward will far, blow up your profits versus focusing on the probability of success, right? So that's one of the main things that I'm focused on kind of going forward. Hi. You gonna say hi to the people? Hi. Good girl. Good girl. Go on. Go to bed. Go lie down. Go on. Good girl. Oh, my head's cut off. So, just for the pro members, again, we will go over that in the member only webinar. But basically, you're just going to see me doing a lot more pullback trading, right? So we got some questions here. For new trader that is developing discipline, is it okay to pick 2 or 3 setups if your original setup isn't generating potential plays? No, I'd say stick with one. Just stick with one setup. If it's not working, developing the discipline of not doing anything is more important than splitting your attention across a bunch of setups. That's, my opinion on the matter anyways. Just pick a singular setup and say, this is what I'm going to do. You can do variations of that setup. So I'm a trend trader, but you'll see variations of that trend trade. But while you're still learning, just find something that works for you. And if there's nothing to do that day or week, don't do anything, right? Or paper trade a different setup, right? Go and try to run that math or do that, whatever, or try to build scans that will help you find a little bit more of what you're looking at. I think that makes a little bit more sense. Hey. So again, basically the long and short of that is, for me to try to generate these better entries, I'm focusing much more on pullbacks and playing pullbacks. So you'll see a lot more of those in the watch list, is basically the caveat that I wanted to give. So again, for the blog list or the blog post that I did, the list looks like this, right? All of the charts with where I'm watching them and annotated up into why. And then at the bottom of this, it links to a spreadsheet, right, that has that whole list. Again, it's not a signal service. I don't believe in them, right? I believe that anybody as a trader who just looks to get hand-fed ideas, at some point will have a bad time. The market does a very good job of taking money from people who kind of don't want to do that work and giving it to people who do. But what the point of this is for the members to see what it is that I'm watching and the areas that I'm interested in executing to help build your own kind of a plan, right? So ALC, again, you'll notice that all of these names are fairly strong stocks that are all pulling back into some sort of support area. And ALC looks interesting here, right? We've got support at 77. That this kind of zone was resistance. 76 was resistance back through here. So I'm just seeing if we can pick some up. If we have a push up to 79, again, I'm not just going to buy it right here. But if we get a little push higher, I'm interested in that one. This ALGM is interesting. I also had this anchored VWAP, which just a bunch of them. Oh, it's because I Okay, so that counts as an indicator. Okay, we'll just shrink these for now. Again, just playing with stuff. We'll remove that. And again, from these most recent lows, this swing low right here, you can see it anchored VWAP hits right there, and we have a resistance area. Again, I'll go in detail of the plan to the pro members in our webinar as I refine it a little bit more, make that darker black. So again, I'm looking to see if this one can pop off and kind of break 31, and then my stop will be under this area right here. Again, same kind of look, right? Big, strong stock, pulling back, trying to get a bounce on that one. CRW. I'm actually going to, hold on. I'm going to look at these ones in, let's do this. Yeah, there we go. I really like trade ideas for a bunch of things. It's how I scan to find all these setups and all of that. But I really like it because I can get information on what the company is and things like that. So that's something I'm going to do here. CHRW. Push them a little bit. So yeah, this is transportation. So we'll probably go near the industrials. What I'm looking at here is just this prior resistance area. You can see this consolidation of 4 or 5 days back here. That's acting as support, and we got some consolidation for 4 or 5 days right here. If this thing pushes higher off that, breaking this consolidation, that's where I'm interested, and a stop under here. We got February 2nd for earnings, so we got to be a little bit careful about that. CSV, which is I'm actually going to just be a little bit annoying here. 1 second. I'm just going to switch these just because my camera's hanging in the way of, just put that in there too. Come on. Go. Funeral homes, which is not ideal, however. If it looks good, it looks good. Again, same look. You'll notice all these have the same look. I'm trying to really refine this down of strong stock, pulling back into this area. If you run an anchored VWAP from this breakout, you can see that's underneath as well. Again, consolidation is just meeting consolidation. So we had this consolidation here. That's now this consolidation here. Looking to see if that continues upwards. FGen, I have on the list still. I am in some FGen. I just still really like the look of it, so I'm just going to leave it. You can see that this one's in a nice uptrend. It's got this kind of declining triangle going on here. It's a nice uptrend on our time frame, but this one's a little bit weaker on the weekly than I would like. However, it's got this gap up until 20 that I think that could be blue skies. So we can look at that. ITOS. ITOS. Same kind of name, right? Pull back, strong stock, pulling back. It's biological product. Fairly low float, only 27 million in the float, so you got to be careful of that one. It's more on the IWM side than is anything else. Big, strong name, pretty dramatic pullback into this prior high, and then it has this green candle, this piercing pattern on the candlesticks. If you don't know, I guess I can zoom in. Oop, that's not what I wanted to do. A piercing pattern for you guys that are learning candlesticks is basically a down day, and then the next day gaps down and rallies up into that. It's just the name of the pattern. It's kind of like most patterns, just showing a negation of, right, buyers versus sellers. And then if you go back here on the weekly chart, you can see that this area right here was resistance before. So I'm hoping that if we can kind of push up from here, that will act a little bit of support. Shrink this. Where do I have? So I've got like 39 or so that I'm going to watch on that one. JBL, and this one actually made it into TI Strength. I kind of copied it from TI Strength. this week, but nice looking bull flag here. Again, strong push up, pull back, just trying to see if this one continues. Circuit board manufacturing, again, not too sure what that is, but well, I know what circuit boards are. But again, just trying to stick with what's relatively strong, right? You take something like this and you compare it to the SPY, and you can see how that's holding up better than the market. It's one thing I do all the time when we get these pullbacks in the market. It's like, okay, what's not pulling back? And that's what I'm going to take a look at. So LYV is Live Nation. We actually had a trade in Live Nation back here, looks like, looking at my other chart. And that was obviously a great trade. I didn't hold it for that gap. I wish I did, but I got a good trade out of that. And now it's kind of pulling back to close this gap right here at 110. And just notice all the bottoming tails in through here. So 3-4 bottoming tails in a row. Maybe some accumulation going on here. So we're watching that Live Nation pullback. Marriott. MAR. We got a full list. I got all 15 filled out. I told you I was bored. I got a lot of work done. 160 was resistance in through here and also resistance here. So maybe support in through here. It's hilarious to see. I talk about all the time about how trading news makes no sense. I think this is a perfect example of that, because say you didn't look at the charts and you just look at the news, and I said, hey, there's a new COVID variant and it's everywhere. Like everybody has it. Pretty much everyone in planet Earth right now has COVID. How's Marriott Hotels doing? And you're like, well, they're probably selling off. It's absolutely not, right? It's holding up better than the overall market. So just showing, hey, look at use your eyes, not what you see in the news, right? So this one looks good, holding up. And again, just notice the bottoming tails in through here. So every time we near 160, someone comes in aggressively buying that. NRG, I've had on the list here for a while. Big, strong stock, come back, and it's holding this $40 area, which was the close of this gap right here. Nice hammer candle on Friday. This is an energy play. It's utilities. So boring, but a lot of these you'll notice are quite boring, because when I went through the ETF list before, everything that was boring, like industrials and energy, is doing very well, and everything that's super hip and exciting, like ARC fund stuff, is getting killed. So I just want to stay in the stuff that's doing well. Pfizer, I'm still interested in, as long as we're holding this area right here. So this prior resistance acting as support. And again, notice the bottoming tails every time we get into what's this, like 155-ish. There's some buyers in there. If this holds and it moves higher, that's what I'm interested in on this one. If you go back on the weekly chart, you can see that it's got a little bit of a zone in through here, but mainly we're just looking at this recent high. CI. This one is like a gap fill. You can see this, it had whatever happened on this day right here, probably earnings or something, where it gapped up, it opened, the open is the low of the day, so the sellers didn't get anything going, and then it closed right at the high of the day. So a really strong day happening here, and then we're back down to that level now. Bunch of bottoming tails in this area, and then this big flush candle that was met with buyers. If we get back above this consolidation, that's where I'm interested in that one. SNDR. Oh, I'll have questions in a second. I promise. We're almost done. We only got 3 more. Again, snowed in, got a lot done. On the weekly chart on SNDR, you can see that we have a little bit to go to this $30, which may be a target if we kind of break out from what I want it to. This one's trucking, so probably another industrial type thing. Boring, but right, that's what we're after. Just playing this $26 area, right? It was resistance here and here, and then look at all the bottoming tails around 26, and bottoming tail, and then also this candle that gap down and held above 26 just shows me there may be some accumulation around the $26 area. So that's what I'm going to lean on. If we start going tomorrow above this area, that's where I'll get involved. If we close under 26, it's probably where I'm wrong on that one. And that also has an anchored VWAP from, oh yeah, just this prior swing low. So in trade ideas, again, you saw both trade ideas and trend spider. If you scroll right below me in the link in the description below, that will take you to my website if you're interested in, maybe trying Stats Edge Pro, or even if you just are interested in any of these softwares, there's links there for you. Those are affiliate links, just full disclosure. So if you are interested in trend spider trade ideas, if you use that link, it helps support the channel. The reason I started all this. Yeah, so an anchored VWAP from this swing low, you can see that's right at 26 as well. So a lot going on here at 26. So I'm just going to lean on the level. Again, we're always just looking for risk reward, right? If I can risk 50 cents, if this thing really gets going and tries to test that 30, that's a massive risk reward. Give me a handful of those and I'm happy. Some cement manufacturing, again, right, industrial type stuff, has a big level here where you can see bottoming tails kind of throughout. Right, so we got a bottoming tail here. We've got a big bounce from this area here, and we'll call this, 36.50 to 37. So that's the level on that one I'm going to play against. Again, you'll notice all of these charts kind of look the same. Big, strong push up, pull back, trying to get in on the pullback to see if we can get some continuation on them. And lastly, TRN. Another railroad type of play. Again, all boring industrial stuff, but broke out of these prior highs, and now we're pulling back into them. Again, notice all the bottoming tails every time we get near those highs. If we get a push up from there, we can take a shot you at this 33, 34. So, again, it's that risk 50 cents to make a buck or two. If you can get $2-3 on a stock like this, that's 10%, right? Give me 10% every few months and I'm a happy camper. And that is the list. So lastly, before I just open all this up to questions and chart requests, is, I always put my thoughts on the bottom. Sometimes it's very long, sometimes it's not, depending on what's going on in the market. And I just said I spent a lot of time shut in due to snow and ice, found myself on Twitter, and I said this is the most bearish I have seen from market participants I respect, which I think is important, in a very long time. So not just, the people who have been calling for the downfall of America every time the market ticks down 2% for the last 3 years, right? Those people I'm just not even paying attention to anymore. If you're wrong for that long, then, again, unless you have a reason for it, the people who are just saying, oh, this is the end this time, it's, damn the Fed or blah, blah, blah. It's just, you're not adding value by just shouting that all the time. So I'm not paying attention. But like actual people who trade and hugely bearish. And I don't know why. But I think the main reason is this bifurcation of the market, right? Again, we have, easy way to look at it is Burke B, right? Just skyrocketing. Right? Berkshire Hathaway, Warren Buffett, he invests in value names, things like that. And then we have ARKK getting killed. So for the people who refuse to move on, and this is one of the main reasons I like relative strength as a trading philosophy. But the people who are still going after those growth names heavily, right? I took my shot at some of them in early January. Small loss, didn't work out, moved on. But those people are seeing an incredibly bear market. The people who do more of analysis like I do, where you look at all of the sectors, you look at different countries, you look at all of these things, we're seeing that there is still a bull market going on. It's just not where it was going on for the last few years. So I think that's the thing, is the people who they trade a certain subsect, and this is why I never recommend people trade like an industry. Say I trade, growth stocks, or I trade biotechs, or I trade this, or I trade that. It doesn't make sense to me, because there'll be times where that sector is good for trading, and there'll be times that that sector is bad for trading. If you only believe in one sector, just buy that sector's ETF and don't trade. Just let it go. Those people, I think, are seeing a bear market because they're trading stuff that's in a bear market. Even gold bugs right now. Gold hasn't moved up in like 2 years. They're in a trading a bear market right now. The people who are actively kind of rotating into whatever's strongest are seeing that, yes, it's a bull market, and it's not nearly as fun. Like, I much prefer a growth bull market because those things go up 30, 40, 50, 100% at a time. These lamer names go up 5, 10% of the time, which sucks. And, I'd rather put 10 grand into something and make 100% than put 10 grand into something and make 5%. But if that's all there is, then that's what I'll take. And so I just put at the bottom that bottom picking might be something that works in normal markets, but we're in two markets right now, right? A growth bear and a value bull. So I'm basically, just to simplify my life, is I'm only focusing on pullbacks and uptrends in the near future. So I usually have a handful of setups that I try. The other ones just right now aren't performing well. So I'm going to just live a simpler life, even if it means slightly less money from it. But, if that's what works, that's what works. So one of my main tools for this is just TI strength that you can just see right here, right? Again, so if you're interested in trade ideas, this is essentially just an algorithm that I created that's within Trade Ideas. It's any membership can get it. Oh, a different one this time. Hey, bud. Are you coming to say hi now too? I have dogs. I like them better than people. Sue me. But yeah, so this algorithm essentially just does just that. It ranks stocks based off their strength. So you're always going to be focusing on whatever names are the strongest. So this is one of my main tools for it. Building some other scans as well with that. And, so again, I think it's always more fun, and there's a lot more money to be made in, buying a Peloton if you can nail the bottom. Right, buying a Peloton way down here, just killed, and then hopefully it rockets and you make 100% on it, and that's great. It's so stressful and boring, So for the last little bit, and again, I'm here alone, so I don't have the boss knocking down my door, so we can stay as long as you want. So chart requests and questions. Let's go. Again, link in the description below. Check out my website. Check out the softwares that I've been using today. If you're interested in elevating your trading, I know Trade Ideas actually has a MLK sale going on right now. I'm sure TrendSpider does as well, but I just haven't seen it. Yeah, so if you click on the link below, if you're interested, you can save 20%. Just type in MLK Day when you check out, and even by using that code, as long as you click on the link, that will help me out. So The first question I see here, if I do that, perfect. I love this. Is a really this software company actually reached out to me to be an affiliate, so I might do that soon. It's a very small market, people that want to live stream with Macs, but a VWAP versus VWAP. So it's important to note, and you're probably talking an intraday VWAP. So let's put this bottom chart. We'll make this an intraday chart, and we will add in indicators and VWAP. So it's important to note that every VWAP is anchored somewhere, right? The traditional day trading VWAP is just anchored at the beginning of the day, because think of the VWAP as essentially the average price of a market participant on this stock. So Peloton, this black line here is VWAP. And again, it's just saying that this is the average. If you average price and volume together, this is the average price of the market participant. But it's anchored from the beginning of the day, right? And that's just the traditional way that most VWAPs will work. An anchored VWAP is basically, and the guy to really dive deep into this one is Brian Shannon, but an anchored VWAP, you just get to choose where you anchor it from. So for example, if I chose this gap down candle on Peloton and I click on that, I know that the average market participant, basically saying if you dollar cost averaged this stock, exists up here. Now, the use of it is a couple things. One is you can very simply look at it and say, okay, this is where the average market participant is. Therefore, if the average market participant is down, then they're probably not interested in buying a bunch. If the average market participant is up, then they're probably interested in buying a bunch, right? Block people right from, oh, there's a ban right there. You had to ban that guy right there. There you go. That's one way to look at it. Another thing that I've noticed over time, following Brian Shannon, talking to him, is that it often asks as support and resistance area. So that's something that I'm playing with a little bit more, is using that as a pullback area. But yeah, just note that all VWAPs are anchored. The question is just from where. There's not like a time frame on them. They're not like a 5-minute VWAP or a daily VWAP. It's where are you saying that the average market participant exists from. So for example, on let's do, what's one that looked really good? ITOS. So if we use ITOS, for example, and we say, is it this pullback? I think. So if I just anchor the VWAP from this pullback, which is always, yeah, you can see that this area is interesting. So again, if we can break above that, if I anchor it lower and I just say the low of kind of this last pullback, you can see that that's right where we are. So basically, if the average market participant from this swing low, which is where I always try to anchor it from, is a very significant swing high and swing low, was right here. Your average is about this area right here. So if you were starting to buy it in the 20s and you say you bought 100 shares of this every day, right, your average would be right here, right? Because you're buying some up here and you're buying some down here. That's where your average price is. And often these average prices get defended. So that's kind of the theory behind that. But yeah, I think that's the most important part, is that all VWAPs are anchored. It's just the question is, where are they anchored from? And the anchored VWAP drawing tool, you get to choose yourself. The regular intraday VWAP is just done from the opening print of the day. But it's the same math. And again, Brian Shannon's from alphatrends.net. He's kind of the godfather of this. I think he's coming out with a book soon. So I will definitely be buying a copy the moment it releases. Maybe I'll get him to sign it for me because I know him personally. And yeah, so I will definitely be tweeting and everything when he comes out with that book. Finally, I think he's like 4 years late, and that will have like a super comprehensive guide. At what point does a divergence breakdown no longer become a divergence? Well, technically, it no longer becomes a divergence when the RSI makes a new low. Pizza yawn. So technically, this is still in divergence until this RSI makes a lower low. So if the RSI were to break, say, 30 at that point, that's where this thing exists. That's why this indicator, just like all indicators, are completely useless on their own, right? You always have to take the indicator and you have to apply price action to it, right? Because Peloton, I took a small shot on Peloton when it broke this, right? So it broke out here. I took a small shot on it. The next day I was out for a tiny, tiny loss. But technically, as long as this is making higher highs or higher lows, and this is making lower lows, it's in divergence, right? But that's why, again, you take an indicator and you have to apply price action and technical patterns and candlestick patterns, that type of thing to it, in order to make sure that you're still entering, because this could divert for ages, right? It could divert for months. So it's important, and this is the problem with some of these things. People who just say, okay, well, I'm just going to trade RSI divergence. Well, if the first point that this was technically diverting would have been like way up here, so you'd be long here, and you would need all of this to come back just to break even. So yeah, so technically the answer is when the RSI makes a lower low, it's no longer diverting, which can happen either through a big price drop or just through time going by and the RSI kind of working itself out. But again, that's why all indicators in and of themselves, you all know my stance, they're useless alone, right? If you want to say, I want to grab this indicator and I want to use this to find this, and then I'm going to enter via that, then that makes more sense to me. But yeah, so these things can go on forever. Same with tops, right? Tops, I know there was one. So, right, technically, if you really squint, there was an RSI divergence here on the SPY, and you got a nice down move from it, but it's still diverting, right? And these things can go on for absolute ages. So that's always why I say something like an RSI divergence. Here's a better example, right? So we have a divergence in through here, and then the SPY continued to rocket up for a long period of time before eventually pulling back. That's why I say something like an RSI divergence may be a reason to look at a stock, but then you have to combine it with support and resistance, candlestick analysis, pattern analysis, all of that, in order to, when do I trigger it, right? So, for those who aren't Trade Ideas members but want to give it a shot, we do have an RSI Divergence Scanner right there. And this will print out names that are in that state where price is making lower lows and the RSI is pointing up. You can find tons of them in through here. But then again, right, this is a good way to build a list. So something like IC is actually pretty interesting, right? Where we have this support in through here, and then we have a higher high, and then we have a lower high. So actually, the more I look at this one, I kind of like it, right? If IC were to continue up tomorrow, you could say, okay, well, we've got a handful of different things in our favor, right? We have the support right here, and we have the RSI divergence, and then we have an engulfing candle on Friday. So just by stacking things like that in your favor and requiring more than one thing in order to get you involved, you save yourself a lot of heartache, right? Because you're not just, you have a system there, right? So Market Explorer caught big G before the big move. Yeah, I noticed this one. It was, right, the divergence was happening in through here. So what you could have done is just maybe notice all the bottoming tails in through there and said, hey, if it's going to take out, I think I was talking about this on Tuesday when I was doing that live stream, right? You know, then you use your support and resistance analysis, right? You say, okay, well, we've got some clean resistance there at like 264, call it 275. It closed outside of 275, so that might have been a good place for an entry, and away you go. But again, it's one of those that it technically, the RSI divergence started like right here. So instead of just buying it there, you're way better off just waiting for it to come back. And that's one simple way that I think you could use a strategy like this. So let's see if I can find one that makes sense. This is more or less how I would build. Let's find just a really clean one for my example. Okay, here we go. Right, so we had lower lows on price here and higher lows in the RSI. And then we've got a pretty clean resistance area right here at like 1950. So you could just simply say a close above 1950 is going to be my entry. And that's a way to combine an indicator analysis with a candlestick analysis. Now, that might be too wide, too big of a move for that particular one. But I do think that that's a pretty easy way of doing it, right? So AVPT, right? You could say, okay, this thing's got the RSI divergence, right? That's why it made the scan. And just say, okay, we got some clean resistance right here. So that's 665. So you could just say, okay, if we have a close above 665, that's where I'm interested. All right, I'm going to stop myself under whatever the most recent swing low is and try to go for at least 2 times that risk. Right? Real simple, right? Always try to keep it as simple as you can. And then again, always combine certain things. Right? CING, again, things was heading lower a bit. RSI was heading higher. Right? So what's this? This is a real slow mover. But right, 265, you could say, okay, get me in above 265. Right? Maybe put a stop under that low. If you get a reversal from there, great. For me, again, I'm still going to continue to do some of those, but for the next little bit, I'm going to try only focusing on these trend continuation plays. I would count IC as a bit of a trend continuation as well, right? Because, the stock, especially if we go to a weekly chart, right, this thing's obviously in an uptrend. It's just pulling back here to this level right here. So what I may, so let's do an anchored VWAP, see if we're anywhere near, see, right there. And then back into a daily chart. Right, so we've got some, just draw a horizontal line right there. So you can see a little bit shy, but we had the bottoming tail in through here. We've got this gap fill in here. We've got the anchored VWAP here, and we've got an engulfing candle there, which is, an old mentor, a guy I used to trade with, would just call that stacked catalysts, right? That was his way of terming that you need a handful of things that you think are going to trigger the next move stacked together, and then that's a reason to take a trade. So I'm actually going to, even though I'm not going to go back and update let's click on this. I'm not going to go update the spreadsheet, but I'm actually going to I've talked myself into it. I usually stop at 15 things, but I'm actually going to put IC and I'm going to say 14. So we're actually going to have 16 things on the list, which is uncharacteristic of me. But we'll go 14 and we'll go 13-ish. So yeah, so I'm adding IC to the list for you pro members. That's I'm putting it in the Google Doc right now, but because I just like that because it combines the RSI divergence with a strong stock, with a support play, with an engulfing candle, right? So if there's a lot of things there to say, hey, it's probably good shot to take. So, all right, guys. So before I go, any chart requests? Again, I never see how many viewers because I always just get sad. But chart requests, questions, let me know. Again, link in the description below for the softwares I'm using. And again, that the main reason I do this YouTube stuff is to get paid by those guys because I am a trader. Otherwise, I'd be napping. If you could hit the like button. Also, YouTube always yells at me to make sure everybody hits like. I see there's a lot up there. But the more the better, the more YouTube kind of circulates my content. Again, the more reason to do it. Timothy wants me to look at it. I keep doing this because I've got this fancy, not fancy. I've really upgraded my game. Light. Good looking bull flag on this one. What do they do? Oh, I saw them. I wish I could. I can't show you. If I move this over here, you guys don't see that, do you? No, because that's part of the streaming software. But it does this like cool animation when someone likes it. It hits my dopamine. Is that it? Is that all the data for light? It's a fairly new issue. Later, bud. Okay, so that's good. It had a spike back there. All right, so you got to watch that spike. What's that? 110. So you get a little bit from there. So that's interesting, right? I would say, if you're not buying the support down here, you got to wait for that resistance to clear. And then note that like right above, you got some more resistance. So I'd be a little bit weary of that. But again, it's strong. No doubt about that. Earnings, 10% short float. So that's not bad. And earnings on the 8th. So just keep that in mind, right? Make sure you're at least my philosophy when it comes to earnings. Oh, no problem at all. My philosophy when it comes to earnings is I'm either up big on the name or I'm out, right? That's it. Like, if I'm up 20% on a trade that I've been in for a long time, like if I had, light here and it was up here now and earnings were coming up, then I'd probably stick it out. But I want that buffer to make sure that I'm not getting hosed. LNTH. A nice support. All right, so this... okay, so they're a diagnostics company. February 24th, so you got longer till earnings. This one I would say isn't... in an insanely strong uptrend. It's more inside of a range, but it's still a pretty decently strong stock. So I like this one as well. I'll like any play that you've got to clear out. Like with this one, you got to clear out. If you close kind of below this 26, 25 area, if you close below 25, which is down here, you're definitely wrong, right? But if you close below this 26 area, you're wrong. So I like this one as well, as long as you can get near this 26, lean on that low. Know that you've got a high of 30. That's probably going to give you some trouble. So make sure that that risk reward makes sense for your plan, right? If you're in at 27 and then you're out under 26, you're risking about $1. If you can get to 29, right? That's $2, which would be down here. That's a 2-to-1 risk reward. I don't see anything wrong with that. I like this candle, right? A big engulfing candle on Friday. So it's a good looking play. Just a little bit more range bound than I think I would normally play. staying hydrated and healthy. All right, guys, I think that is going to be it for me today. Once again, I appreciate everyone for coming out, hanging out. I plan to do more of these. I may start streaming a couple times a week. I don't know. I don't want to just sit and give what the Stats Edge Pro people get all the time, because then what's the point, right? We can look at that one before I go. LTGH just overdone for me, right into resistance. Right, it's big move already, all the way up into resistance. So not super interested in that one, but yeah. So I'll try to figure out other stuff to come stream about. Suggestions are always great. Again, you can email me. There's a form on my website that you can get to me. Is probably the best way to do it. I get a lot of spam through there, but I actually still check it all. Again, thank you everyone for coming out. Enjoy the rest of your holidays. Stay tuned to the channel for more good content. Leave a like on your way out. Go to my website, would be fantastic. And I will talk to you guys soon.